Welcome. This is Power Trading Radio Live, fueled by Online Trading Academy. For more information, visit powertradingradio.com. Now, here's your host, Merlin Rothko.
Hello, everybody. Welcome to Power Trading Radio. Merlin Rothko with you for your Tuesday afternoon edition. Happy Taco Tuesday to everybody out there. A little bit of an about face for our markets. Didn't quite do what I thought we were going to do. I thought we'd have a little bit of follow-through given the way we ended yesterday. Nope. Of course, we had an about face, which has a lot of people wondering what on the earth is going on with these markets. So we'll address that on today's show. We're going to have a little bit different approach, at least from a focus perspective, for our guests who's going to be on segments 2 and 3. We're going to have Craig Weil on the program, longtime floor trader out of Chicago. Predominantly day trading, short-term guy, right? In and out of the markets, doesn't care for all the political news, doesn't care about all these different viruses and all the different things. He just wants to get in, get out, and be happy. So I think that's a great way to look at these markets if you can do it. I know many of you probably cannot do that with your full-time jobs, et cetera. But we'll talk about that today when Craig's on the program. If you have questions for us, send them on in at powertradingradio.com. Click the little button there that says Power Blast, or if you want to join the discussions on our YouTube channels. We're broadcasting live right now on Online Trading Academy as well as Power Trading Radio's YouTube channel. So you can go hello and say hi to Brendan on Power Trading Radios. And we got nobody talking right now on Online Trading Academy. It's quiet. Quiet out there on the shh. All right, let's start off with overall markets today. TJ's got up gold here, which was, we'll start there. We'll go from worst to first. Worst performer on the day was gold. Obviously, we had a risk-on type of environment after we've had a week or so of risk-off. Nice spike up in the equity indexes, which we'll bring up here in just a second. Of course, when that risk-on type of movement comes, that usually comes at the expense of the safety assets, like gold. Today you saw gold slide a little bit, nothing overly dramatic. Gold was down 0.72%, closing at 1,566 on the session, making it by a fairly good margin your worst performer. I would say fairly good margin. It was the only one on our list of 7 that we start the show with that was negative on the day. From there, we'll go to the Russell 2000. A nice move up in the Russell 2000. You see a lot of these have a very similar picture of gap filling from what we saw happen on yesterday's gap down and sell-off. Today, Russell 2000 finishing at 1,661, which is where it is at right now. That's a gain of 0.84% on the session. All in all, fairly good. Erasing most of yesterday's gains. You still have a little bit to go from the gap down, but all in all, pretty good for the Russell, which was 6th place. So you know it's just going to get better from here. S&P 500 is your next one. Similar picture, but you notice the candle looks a lot stronger. Went deeper into that gap today. S&P 500 finishing at 3,276 on the day. That was a gain of 1.01% or 32-point move to the upside. Again, it looks great because it erased a lot of yesterday's gains, but we still have that gap down to contend with, which I've had 2 questions about that being an objective for tomorrow's session. I'll address that here in a little bit as well. All right, slightly missing the podium, the NASDAQ. Here's your chart of the NASDAQ 100, which finished at 91.20. The composite finished a little bit higher at 92.69. That was a gain of 1.43%. I remember yesterday it was down almost 2%, so still a little bit of a ways to go. I have a great question I wanted to ask, but I'll save that one. 130-point move up for the NASDAQ composite, but that still did not get it to the podium. A 1.43% gain for the NASDAQ, and it didn't make the podium. You know there's some good movers out there today. Crude oil brings in 3rd place. Yes, it's about time, and actually it came ripping down to this, long-term area that's been bouncing at, going all the way back into 2018. So crude oil looking pretty good on the day. It had a move up of 1.58%, up to $53.98. That was a gain of 84 cents per barrel for crude oil, which is a welcome relief for anybody who's just been suffering in this big sell-off here. And as they say, the trend is your friend to the bend at the end. This is definitely one of those catching a falling knife type of moments, and given the acceleration we've seen over the past week, it was overdue. I think you're definitely due for a bounce here on crude oil. All right, that was 3rd place, bronze medal. Number 2, Bitcoin. Bitcoin may actually be in 1st place now. I'm going to see if I get these in order. We're going to go back. Go back to the other one, TJ, because Bitcoin just leaped into 1st place. I love how that happens. By the time I have my numbers all written, the things change, but we'll go to the ZN. Here is your 10-year. Yields continuing to, you had the yields rally today. I was going to say continue to drop. They've been on a pretty aggressive sell-off. We were at 1.64 today is where it finished up for that 10-year. That was a gain of just about 3.036 on that bad boy. Again, still holding above that trend line, although we could probably delete that trend line at this point. I think it's irrelevant. But you had a pretty nice move up in your Treasury and 2.24% on the yield, which means that the price of the 10-year note sold off. That was number 2. Number 1 brings us to Bitcoin, which I mentioned just leaped into 1st place. It was second for a little bit. It's up 2.87% on the day. We are up above that 9,000 mark. We'll see if we can hold that one. We're at 9,162 on the day is where we finished for Bitcoin, which makes it your best performer by about 1 full percentage, well, half a percentage point. So not too shabby out there. Those are your top 7 markets. Hopefully some of those put some green into your pocket. A lot of reasons why we might have seen these markets move as we did today. So let me see if I can go into a couple of them. The first thing, obviously, we have the impeachment piece. I think a lot of people are starting to feel a little bit more comfortable that he's not going to be impeached, although I'm taking the long shot on this one. It's just I don't know. I like long shots. The other part is the coronavirus. A lot of you sending in comments and questions about that one. Look, I think the coronavirus ultimately will be like we've seen with Ebola and like we saw with SARS, which was very blown out of proportion. I think that the media has a great way of precipitating fear and making it seem like it's the end of the world coming. I think we've got better infrastructure, better hospitals, better quarantine measurements, etc. So I don't think it's going to be as full blown out crazy as they have been portraying it on the news. That said, it could potentially get there. And I think that's why we saw that aggressive sell-off, people just reacting to the media frenzy that they put out there. But ultimately, I think it'll be one of those, not a non-factor. Obviously, there's going to be some loss of life, but it's not the one that's going to be killing 50 million people, as some of these reports are saying. It's getting a little outlandish. So I think that may have been a little bit of a relief rally as well. Another piece out there was economic data. I got to look down for this one because I did not memorize this. You had durable goods orders today came out much better than expected. Durable goods orders came out at 2.4% gain. That was supposed to be 1.2 was the expectation. The previous number was negative 2.1. So basically saying this purchase of big ticket items like refrigerators, TVs, washing machines, etc., surging. That's a good sign for consumerism. It's a good sign for companies that are selling those items. But when you strip out transportation, this was kind of interesting. That's why you always have to look at all the numbers from multiple perspectives. When you strip out transportation, aircraft and vehicles, core durable goods actually declined by 0.1%, which was worse than expectations. So while it looks great on paper, and I think that's why the market reacted, part of the way it did today is, hey, we're buying back. Well, companies are going to have great earnings. The bottom line is you strip out the airplanes and you strip out the cars and trains, it didn't look so good. So those are some of the pieces today. You also had what was the other one? There was one number out there that I thought was pretty impressive. Where was it? Oh, consumer confidence numbers, 131. Are you really that confident right now, huh? It just seems like it's an all-time high. We're just spiking consumer confidence numbers. And, when everyone's weighted to one side and thinks it's all going to keep on going up, that's usually when it drops to the south side. So consumer confidence number was also very, very high today. Okay, let me go to a couple lists of questions. There were multiple that came out today because of what we saw happen with the equity markets on gaps. And I'll ask Craig Weil about the gaps here in just a second. Brendan says, I have a long-winded question before. Basically, this is my new goal, my retirement account. He can take advantage of ETFs, and he says, what's the best course of action to take with helping me grow this account? I've already taken core and futures. It really talks a lot about strategic investor, which is saying, how are you allocated in your company's 401k plan? How young or old are you? At a certain point, you need to look and say, okay, if I've taken core strategy, I know the principles of market timing. If I've taken futures, you probably know a little bit more about international markets and asset relationships. So it's up to you to figure out what assets to be in and time the market more effectively. What I would check with your employer is to make sure that you can be active. Many company 401k plans won't allow you to make multiple trades in a period of time, or won't allow you to make a certain amount of trades in a period of time, and they'll freeze you from making more trades. So find out your rules first. But if you can be more active, I would certainly go about market timing this one and trying to buy these dips or sell these market rallies that get overly extended and try to get a greater rate of return than just buy and hold investing usually will enable you. So as far as what's the best course of action, apply what you learned. Go out there and apply core strategy. If you are looking more longer-term approach, of course, you have to look at longer time frames, or you can be using some of the strategies that are taught in Strategic Investor, which are going to be really more around using options, which you probably have access to as well, and using options to help increase our rate of return on positions we might already have, protect positions as well, and that, therefore, would be a great tool for you, Brandon, to utilize in your 401k or your retirement account. Michael, you asked about cryptocurrency mining. Not my thing. Back when I wrote the class, I dove deep into that. There's a ton of them out there. It really depends on what you got. If you said you may not have the best graphics card, it probably is not worth your effort to join a mining pool. A lot of times, depending on where you're at, the cost of electricity to run your computer until you actually get something from the pool is just not worth it. All the numbers I ran, all of them basically said it's not worth my money down here in Southern California. If I was up in the state of Washington, it might have helped because the cost of electricity was so much cheaper. But I just said it wasn't for me. But you'd have to go dig deeper. I don't have any sway in that one. I'm sure I might have some viewers that are more into the cryptocurrency mining space and maybe point you in the right direction. All right. Cool. There we go. Let's go and take a quick break. When we come back, we're going to have Craig Weil on the program. We're going to talk about probably futures markets and what's going on out there from a short-term perspective. I love it because Craig's probably not in the market right now. He's in and out, and now he gets to talk and trade and teach about it. So hopefully we'll have Craig here on the phone in just a second. If you have a question for him, send him on in at powertradingradio.com. Click the little Power Blast button or join Chadsbury and Sabina and Gayer and Vernon on Online Trading Academy's YouTube page, or go to your Power Trading Radio YouTube page and say hello to Unscammable and Brandon and Dave and Ruben as well. Cool. We'll be right back after a short break with Craig Weil.
What if you knew the income strategies professional investors used? The strategies designed to generate active income from the financial markets. After all, no one's going to care more about your money than you.
I learned that I can be in control of my 401k.
I used to work for money, now I have my money working for me.
With the right training and guidance, you can learn the skills to become a more confident investor and make your money work harder for you. Want to find out what's possible for you? You can, as long as you're willing to take the first step and call OTA today.
Call for your free tickets right now, and you'll also receive a free Professional Insiders kit loaded with lessons from some of our top instructors on topics like enhancing your retirement strategy, capital preservation, and income generation. The Professionals Insider Kit makes it so you can get started right now.
Call 888-304-8723 or visit us online at tradingacademy.com and schedule your free class today.
Click is something I wish I had when I started because it facilitates the learning process a lot quicker.
This is not about taking many trades, it's about taking the right trade.
It helps me save myself from myself. It's just a revolutionary educational tool. It just propels you through the learning curve.
The biggest shock for me is the level of innovation that happens within the company, and it's continuing.
Is just perfect in this new century of trading.
Everyone's on the same side, and I think that's what I love about it more than anything else. Helping each other, supporting each other, all with the same objective. Again, wonderful.
There's no mountain high enough that the leaders in this organization won't climb for their students. They'll just never give up.
It can only help. It can only make one a better trader.
Gives you one of the most valuable things we all have, and that's time.
Welcome back to Power Trading Radio Live with your host, Merlin Rothfeld, and today's special guest.
Hello, everybody. Welcome back to Power Trading Radio. Merlin Rothfeld with you for your Tuesday afternoon edition. Question came in from Chadsbury. He says, what is the BIS survey? It's a Bank of International Settlements. They do it all the time. They have all kinds of reports that come out as well. And basically, they're just issuing reports looking at what are the trends in the banking community, what are the trends for central banks. And it's useful to a point. For me, it's just one more piece of information I try to digest, but I really don't even follow it. I think one of the most interesting things about the recent release was really the amount of central banks, or banks in particular, that were looking at issuing digital currencies, which, of course, we've talked about on this program. We see that, I think from our perspective, we see that as one of the growing trends out there, is more interest in digital currencies, which, of course, would bode well for the whole cryptocurrency space. But that's the extent of it. We don't really dive deep into that one. All right, our guest today hails from Chicago, where he spent many years on the floors out on the Chicago exchanges. He's been on the program many times, and for those that don't know, he is a shorter-term trader. Doesn't really like the long-term perspective because there's too many whipsaws out there like we've seen over the past couple weeks. We've got Craig Weil joining us. Craig, how you doing?
Hey, Merlin. I'm great, thanks. How are you?
Good. Pleasure having you on. Have I had you on this year yet? Is this your maiden voyage for 2020?
I believe so, but don't get too excited because I think I'll be on next week as well. So.
Wait.
I haven't been on yet. I'm doubling up to catch up, I guess.
You trying to take my job?
No, No way.
Come on.
No one could do what you do, Mo.
You said you
And by
host.
the way,
You said you hosted a radio show in the past. I need a break. I'm ready for some extended breaks from the show. In April, it will have been in April it will be 10 years on April, the first week in April, and I haven't really taken like extended time off. I've had 2 weeks is like the longest I've taken off, but I could take some months off. I'd appreciate that. You could just host the show. I'm ready. Bring it, Craig.
Well, I'd be happy to step in. However, 10 years you've been doing the show now?
I honestly, I look back and go, you got to be kidding me. We've been doing this a decade?
Yeah.
We've been doing a decade and we only have 35 people watching live right now on our Online Training Academy YouTube page. Come on. It should be thousands. Something to be said for marketing.
Flies, right?
That's right. Well, it's all going good. Tell me how you're faring. We've had this January that started off pretty rough. We've had some pretty nice downside move, which I think many of us welcome. Of course, today we had this nice little knee-jerk reaction. I actually thought we would see a little bit more downside follow-through before we got this pop back to the upside. But what's your take on all the madness going on right now?
Well, it's just that. It's madness. And, I can't tell you how many predictions that I've heard since, in the fourth quarter and certainly coming into this year, how this market can't keep going up, but yet it does. We've had a bit of a backtrack, so that's always healthy. And something like yesterday where you get that little kick in the pants catalyst, so to speak, that sent a lot of people scurrying for the exits. And, people on CNBC will be blaming it on the coronavirus and all of that. But, they're paid to make up something that seems logical or sounds logical, but I don't think they cured it. And today we had a nice rally in the market. So I'm sure they're saying, oh, the bargain hunters came in, or it was a relief rally. It was something to feed to their listeners because, as you know, and I know as well, the worst thing you can have on any kind of broadcast is dead air. And so they're making up stuff as they go. And the fact of the matter is, yesterday there were more sellers than buyers. Today there are more buyers than sellers. Who knows what tomorrow will bring. But it just, as long as I've been doing this, Merlin, it's just flabbergasts me how people do things for themselves in the market they would never do as a consumer. In other words, they chase price like there's no tomorrow, the fear of missing out or whatever. They believe the way to make money is to buy rising prices, to be fearful of falling prices. And that's the polar opposite of what we do as ourselves as consumers. So I don't know why it happens in the stock market. It's a herd mentality. I mean, there's a lot of psychology analysis that have been devoted to market psychology, but as long as I've been doing this, and I'm sure I can count you in because you've almost been doing it as long, it is mystifying from one day to the next.
Yeah, but it's behavioral analysis. I mean, after a certain point, you kind of understand that there's the higher probability that something is going to happen based off of what you're seeing with price action or by the media's influence. And I think we've seen a lot of that. I mean, as soon as I heard the coronavirus thing, I was like, oh, this is great. It's great for a sell-off in the markets because what will happen is, we live in an environment now where the media has to have something sensational. The video of the fireman rescuing a cat out of a tree just doesn't sell, as opposed to, you watch your news and the first 15 stories are death and destruction and fires and murders, and you need sensational stuff. And when you have something that has the potential of some rogue virus that's uncontrollable to kill tens of millions of people, and everyone freaks out. And of course, as soon as I heard that, I was like, okay, this is a perfect point to be short on this one. I don't think that this is going to turn out to be that bad of a situation, but you never know. Let's hope it's not. Obviously, we don't want to see the loss of life like that, but it could certainly, there is the potential that something like that happens. Let me ask you about this bounce today. So a question came in from Jimmy SoCal, one of our regular viewers, Power Blasted this one in last night, and I think it's kind of the same for most of the indexes. So if you look at the S&P, you look at the NASDAQ, you look at the Russell, you look at the Dow, we had that big gap down coming off into Monday's session. And it was pretty significant. Obviously, we showed some weakness yesterday as well. And then today, follow through from yesterday's close, which was rather strong for most of these indexes, and continued to rally aggressively. The question from Jimmy was specifically to the YM, but I think we could look at all of these market indexes and say the same thing. We're saying, look, it just barely breached that gap. So TJ's got it up here. I'll bring up the Dow just so the viewers at home can see what Jimmy was referencing. There is the Dow Jones Industrial Average, or the futures for the Dow Jones. And you can see that the tail for today just started to close this gap, didn't really close it. But the question now becomes, where do you think it's headed? Are you the type of trader, Craig, that if you saw this happen and all of a sudden you had this abrupt rebound back towards a huge gap, what would your probability sensor tell you? That there's a higher probability that thing's going to close that gap and go to the close that we saw on Friday's session, or is there any sort of, does that even play into your analysis?
It doesn't, and
okay.
I'm probably the last guy or the wrong guy to ask that question to, because I never try to predict those things. Gaps or any issue with price. Supplier-demand issue. In my world, they're not magnets. In other words, we can't presume that price is going to return to close that gap or return to any other significant area of supplier-demand on the chart because we're not in control of any of it. And so it's kind of a fool's game to predict it. About all we can do is be prepared that when it does or if it does return to the origin of that gap down, that there most likely will be some selling pressure. There'll be some those that got left behind that are happy to get another chance to liquidate or go short, and so almost like a self-fulfilling prophecy,
right.
Price may fall. But I would never go long right now with the expectation that it's going to fill that gap. That just isn't something that I'm in the business of predicting.
Yeah, and this is, that's different strokes for different folks. I actually am the type of person that, depending on how it acts, and of course here we're looking at the futures, which are going to have a 24-hour aspect to it, but if you're, a regular equity market trader and you have, let's say you're looking at the SPY ETFs, or for this case, since it's the Dow, we'll look at the DIA. If you have an open tomorrow and it starts to break through some highs or some of these levels that were established over the last couple of days, then I would be inclined maybe to think that it's going to be headed towards there. I'm not going to hang my hat on it, but I do think that on a day like today, you had a serious amount of momentum coming back into the marketplace, and usually that type of momentum isn't a one-day affair. It'll last for a few, and what we've seen over the past few months is when we have a pretty sharp sell-off, there generally tends to be an aggressive rebound which rips it to all-time highs. Now, I don't think we're going to get the all-time highs here. I don't see that happening. But yeah, you could play that on a shorter-term basis. I am a fan of gap filling. I think that there is some psychological magnetism towards those gaps. And if you notice, TJ, bring these charts up here again real quick. That's your Dow. Show them the S&P. You guys can see the S&P actually looked much better. It actually penetrated the gap more. It doesn't have far to go. I mean, if it's to close that gap, you're looking at the S&P rallying up to about 32.94 tomorrow, which is not that far away. I mean, that's 20 points, big deal. We did way more than that today. I mean, S&P on the day was up 32 points today. So there's your Russell, similar picture, and let's look at the NASDAQ real quick, and then we can wrap that one up. So here's your NASDAQ as well. NASDAQ actually, I'll call that closing the gap. I mean, the gap really on this candle here, if you go from that closing price low, was 91.44. Today we hit an intraday high on the NASDAQ 100 of 91.36. So we're 8 points off that high. So to me, I would say that the NASDAQ's actually closed it.
Yeah, I would agree with that. However, I wouldn't have predicted it coming into the day today that we'd have the kind of day we had. And I mean, the fact of the matter is the market has a long bias in the first place because most people are taught to buy. They're not taught to short. And then also the market has been inured to these sell-offs. And I can remember that, back in 2007, the market was making all-time highs, and the subprime stuff was out there. Everybody knew about it. Everybody, a lot of people were predicting it's not good and this isn't sustainable. However, we were making all-time highs. It was only until there was something that wasn't known, that being Bear Stearns and Lehman Brothers and AIG were about to go under, that all heck broke loose. And so as long as we have this upward bias, these down days are looked as buying opportunities until they're not. Right. And you lived through the bubble of the NASDAQ bubble, and every little sell-off was met with a rebound until it wasn't. And so, who knows when that day is going to come? Again, I'm not. No one can predict the future, and so as opposed to these kinds of things, I don't even bother. It is what it is. If it returns to the origin of the gap, I've been taught that most likely you'll have a bit of a deflection back down. And since I'm only in it for a very short period of time, that's all I'm looking for.
Right. No, I'm going to be in things a little bit longer than Craig. So for those who know, Craig's going to be out pretty much by the end of the day. I will hold things that go days to weeks. Right now I'm in a trade that I think I'll probably be in for another couple weeks. If we do get back up on these levels on some of these indexes, I will probably short right at those spots that Craig was mentioning, simply because I believe that there will be some supply coming in at those zones, and I still don't think we're out of the woods yet with regards to the impeachment or the coronavirus or whatever new thing will come our way. All right, guys, we've got Craig Weil joining us today. We're going to take a quick break. When we come back, we'll dive deeper into some of his list of questions. If you have some for Craig specifically, send those on in to powertradingradio.com. Click the little button there that says Power Blast, or you can go to our YouTube channels. Join the discussion, which has been, I think it's getting lengthy on both channels. I like when I see activity out there today. We will look at whatever questions come through for Craig and myself. So type them in the chat, and we'll be right back after a short break.
Learning this way is fine when the stakes are low. But when the stakes are high, you need to rely on skill, not just knowledge. At Online Trading Academy, you build your skill one step at a time. We teach our students to trade and invest with a strategy, not a hunch. You learn our methodology, then practice it. You get to make mistakes and ask questions, and watch instructors make live trades. Develop your skill the right way. Click here to get started with Online Trading Academy.
Meet Mac. As a trader, he liked the signals that came from technical analysis tools, but they didn't help him find the best trades consistently, so he searched for a new approach. Mac attended Online Trading Academy's free class and discovered their core strategy, a trading methodology that spots when big banks are likely buying and selling, so everyday investors can too. Mac carved out a path to trade and invest with confidence, and so can you.
You're listening to Power Trading Radio Live. Watch the show live or on the archive at powertradingradio.com and YouTube, or download the podcast from iTunes or wherever fine podcasts are downloaded.
Hello, everybody. Welcome back to Power Trading Radio. It is your Tuesday edition. I have a great guest on the show today with Craig Weil, and before we get back to that, I want to promote something I did yesterday. I'm just kind of curious to see where people stand on this one. So, TJ, bring this one up. If you go to Twitter and you look at my Twitter handle, which is at Trader Merlin, is what you'll see me on as Twitter. I put a poll up yesterday, just curious, as we were having this really aggressive down day where the Dow was down about 450 points at one point, rallied a little bit near the end. I'm just curious, how many of you think we will have a 4-digit down day in the Dow this year? Like, I'm talking 1,000 points plus. I know a lot of people think that might be outlandish and absolutely crazy, but I put that on here just as a Twitter poll, and I know we've got a lot of viewers and listeners out, so I would encourage you guys to either go to Twitter, look at Trader Merlin, and participate in the poll. I'd love to get your feedback. But also, if you want to make this poll even bigger, share it, because I know you have trader friends out there. I'm kind of curious to see what the poll is. Right now, 50% plus said, yes, we're going to get at least 1,000 point down day in the Dow this year. 30% said no, and then 19% saying, I don't care, which honestly is probably the right answer. Like, who cares? But I'm in the yes category. Just put that there. I think we will see a shock factor, a black swan type event, which all of a sudden brings us down. It doesn't mean we're going to have a collapse this year, but I do think you'll see a pretty quick knee-jerk reaction. Anyway, that's a little poll I wanted to share with everybody. Craig, I got to ask you, you've seen some mayhem. I know in election years generally we don't have wild swings in the market, but we do have a completely undecided Democratic Party, which could create havoc for our markets. We've got an incumbent president, which is always interesting with regards to market volatility. We've got viruses and trade tariffs and all kinds of other crazy things. Do you think we're going to get a 1,000-point down day at least one time this year in the Dow?
Well, it wouldn't surprise me, and I lived through a day where the Dow went down 20%.
Yeah.
And so that would be the equivalent of, the Dow moving down almost 6,000 points in a day. So it wouldn't shock me. As I said, it's going to need a catalyst move in that direction, and I just don't know what that might be, other than some very poor economic issues or a geopolitical event or something like that to create a panic. 9/11 type of thing, God forbid. I'm not. Let me ask you this: before you put out that challenge, what was the biggest one-day decline last year? Did you check that out in the Dow?
Well, now you're pulling up. Now you're calling me out on my historian facts. No, I didn't pull up last year's. I did not.
Mm-hmm.
Do you know?
Mm-hmm. Or I would say what has been the biggest one-day decline in the last 5 years?
It was over 1,000. It was over 1,000 points.
It was.
Yeah. Yeah, we had a Dow.
I wouldn't surprise. Okay. Your memory's better than mine because I'm old, as you teased me about many times. And
I would never tease you, buddy. Never would I do anything like that.
I can barely remember where I was yesterday, let alone what the Dow did. So, but that would be an interesting thing. I mean, anything can happen, obviously, and but it would just take a really bad piece of news to get everybody scurrying at one time for the exit. So who knows where that's going to come from, but. When you're down 450 points, 1,000 points isn't that far away. So I think it's possible, definitely.
It was right there. It was real close. I'll have to go research and find out when that was. And look, I hope it doesn't end up being something like a 9/11 type thing. Obviously, nobody wants that. What I think will probably be the catalyst is different. I think what would be a catalyst is something that Bill Addis, who's been on the program, and guys, if you haven't seen Bill Addis's stuff, you can go to otacademy.com. There's some free content there on all bond markets and interest rate products. He also does some of our Mastermind Clubhouse sessions, I believe on Fridays. I think it's going to come from the credit market. I think what you're going to get is either a default from some major corporations and their inability to pay back their debt, and then all of a sudden they get downgraded. So what that would create would be more of a systemic failure in the credit market. And I think that would be one of the pieces that creates shock on an institutional level. And we get institutions freaking out because, think all the four-letter words you can think of. If I'm loaning money out or I have, I'm buying people's debt and their inability to pay that, then all of a sudden my whole business model changes because I'm loaning money out to get consistent rates of return. And if that model shows cracks in the armor, if you will, in the inability for companies to get consistent earnings and payments, then all of a sudden the whole system is in question. And I think that would require a mass pullout by these companies, and then you get that black swan event. But I don't think it would last too long, but I do think you could easily see 1,000+ point per day. For those that were wondering, yes, the most you could see the Dow drop in one day would be 20%, be 6,000, right around 6,000 points, which would be pretty darn crazy. I don't think you're going to see a lock limit down by any means, but I do think you could easily see a 4-digit down day. But there you go, my 2 cents on it.
Yeah, well, speaking to what you just said, I remember, I believe it was back in the 70s when all of New York's debt was downgraded and they were on the brink of bankruptcy, and that caused a big shock in the market. I don't recall how big a decline it caused, but something like that certainly could happen with a major city. I mean, I know the state I live in is bankrupt. I mean, they could not stand a recession right now because they're way over leveraged. And if you look at the U.S. government, it's just getting worse and worse. We have $1 trillion deficit now, a budget deficit. How long can that be sustainable? And and certainly the economy, as healthy as it is not eroding that debt. The tax revenues are not enough. And so at some point, we're going to have to pay the piper, and that's going to show up in a shaken market whenever that comes.
Totally agree. When we had that crash back in 2008, I was telling viewers, I had a very good friend of mine who, if you saw him at face value at his house, his cars, his jewelry, all the things his family did, you would look at him and you go, this guy's a baller. Like, he is flowing with money. That is actually not what happened. He was just using so much debt and leverage to live this fake lifestyle. And I almost look like, if you look at it right now, our markets are in that fake lifestyle type of perspective where we've been inflating it up with cheap credit, cheap credit, cheap credit. All of a sudden, you won't be able to pay that credit debt back. Everything comes crashing down. We'll have to wait and see how it all pans out. But I think we'll see that 4-digit down date. Real quick question from Don on Online Trading Academy's YouTube page. He says, Craig, how did you decide on futures as your specialty? If that is true, what was it that steered you to that, as he's absolutely thinking of going in that direction? Currently, he's an options trader.
Well, I spent 20 years on the futures exchange, and so on the CME. So it was essentially, once I did that, I knew nothing about futures before I moved over to the CME in 1990. But then I became enamored with them for a number of reasons. Number one, you do not need a very large trading account to engage that market. The second thing were the tax benefits. If you're someone like me who derives their income from the markets because of the 60-40 tax treatment for futures, why spend time trading stocks that require a very large capital account when you can trade futures for a tenth of that amount, and you get the benefits of the tax treatment. Uncle Sam treats the gains in futures much more favorably than in equities. And so those two reasons right there, plus the fact that there's a variety of futures instruments. So when you're trading stocks, especially like a day like yesterday where the market's just getting slaughtered, most everything is going down. It's basically a one-way street.
Right.
And what do I do on days like that? I turn to instruments like natural gas or oil or soybeans or live cattle. There's a variety of products there that do not care one hoot about what the market's doing. And so there are places to go when there's a hurricane outside in the stock market, and that's why the futures market is so attractive to many people. The tax benefits, the variety of instruments, the low amount of capital that you need to engage that market. There's just a lot of things going for it. And so I suggest to anyone out there, they should investigate the futures market, because what they'll discover is a world. And the other thing that I neglected to mention as well is that the resolution in many of my trades in the futures markets are 5 minutes, 10 minutes, whereas you engage in the stock market and sometimes it's all day. The thing just kind of grinds around and never really moves. Right. So there can be instant gratification as well.
Yeah, there you go. So there you go, Don. Hopefully that helped you out there. Tell me, I'm looking at the clock, and we tend to go long nowadays. CJ hates it. What's your teaching schedule look like? Where are you going to be?
Well, I'm leaving Friday for Philadelphia, Oregon. I'm going to deliver a core class beginning on the 1st. Nice. Then I'm taking a week off in Florida, and then I teach futures on the 17th of February in New Jersey. And then I will see you on March 3rd. I begin a futures class in Irvine. Nice. And so maybe we can grab a bite or something like that in a few weeks when I'm up.
Sounds good.
That would be awesome.
Looking forward to it. As always, love having you on the show. Thank you so much for taking the time out of your day today. I will see you in a few weeks here in Irvine.
Okay, great, Merlin. Thanks so much for having me on. And everybody out there, good luck and good trading.
Yeah, thank you, Craig. Take care. Guys, that was Craig Weil, one of the master instructors on Online Trading Academy. When you got 40-plus years of experience on the floors out in Chicago and just trading, there's always something you can learn from these guys. If you'd like to learn from Craig, he will be teaching in Philadelphia, including core strategy, New Jersey, and Irvine teaching futures. So if those locations are near you and you'd like to take a class, I would encourage you to click that link that's showing up in your social media channels right now. You can simply click on that one, type in your zip code to tell you which of our 48 physical brick-and-mortar schools are nearest you. Free classes, paid classes, community events. If you're an Online Trading Academy retake, remember, you guys can retake those classes for free on a space-available basis. So contact your center and see if there's some space available to join Craig in an upcoming class here soon. We're going to take a commercial break, but as I look at the clock and it's telling me, you're way too late. I wanted to share what's going on with Apple right now. Obviously, this is going to give a little bit of pop for the NQ futures because of where we're headed. You had a pretty big spike up in Apple in the after-hours session. You guys can see here we had an all-time high on Apple right now at 327.90. If I go back to it's drifting down now. We're at 321.30, just to give you a little bit of perspective as to where we're at. But when you look at your daily here, we hit an all-time high on the 24th on Apple at 323.33, and that's kind of where we're sitting at right now. So we hit an all-time high on Apple in the after-hours session. That could potentially pull this market up. Of course, if you look at the NQ futures right now, which we'll bring up here, and I'll show you guys on like a 5-minute basis so you can see what's happening with the futures. Generally, that will create a little bit of a lift. As you guys can see here, it did, in fact, it instantly popped the NASDAQ 100 futures, but now we're drifting down to the after-hours session as maybe the analyst statements are coming out about Apple. So there you go. That's your Apple position. Let's go to your economic calendar for Wednesday. A fun one. We've got the Fed opening their mouth tomorrow. All expectations are we're going to see rates stay right where they are at 1.75%, so no big change. More eyes will be focused on that FOMC statement to see what, in fact, is going on there and what their stance is. We also have goods trade balance and crude oil inventories. We'll see if that might act as a little bit of a buoy for this current aggressive sell-off we've seen in crude oil and maybe prevent it from falling anymore. If you look at Euro, you've got German preliminary consumer price index. British pound has autumn forecast. I'm not even going to read that anymore. Get that off there. It's been there forever. New Zealand has trade balance, and Australia has import prices. Your earnings calendar for tomorrow, obviously, all eyes are going to still be on Facebook, on Apple and how they perform today. You've got Mondelez reporting earnings tomorrow, Anthem, Automatic Data Processing, Banco Bradesco, ServiceNow, Microsoft, Facebook, Alibaba, MasterCard, AT&T, NVS, Boeing, and then you have McDonald's, Mickey D's, a lot of big companies reporting tomorrow. Really, I think for me personally, all eyes will be on Microsoft and Facebook. If those two have blowout earnings, you'll see this NASDAQ potentially rip to all-time high. So it'll be an interesting day to see what happens with Microsoft and Facebook's earnings out there. Of course, these FANG stocks have been doing pretty darn good lately. All right, Lee says, I think we're going to have a 4-digit drop. Well, we'll go put it on the Twitter feed so we can keep tallying those ones up. All right, one last thing. There was one question in here. I hope I can get to it without... Chadsbury, you were active today. I didn't mean to avoid you. It's just there's so much going on over here. Chadsbury says, can you recommend 2 to 3 Forex pairs to look out for in 2020? I would say number one would be, that's a tough one. I would say the Euro British pound, the GBP, Euro GBP. That would be a really active one because of the whole Brexit thing. I would say USD JPY because of the risk-off type of trade. And I would probably say USD AUD because of the trade wars and how Australia is doing a lot of business with China. Obviously, if that starts to suffer from on our end between U.S. and China, we have more tensions, then Australia will get more business, and that could have an impact on the Australian dollar. Those are three, but I think anything U.S. majors is usually what I'm focusing on. So I look at the Aussie dollar, the U.S., the Canadian dollar, the British pound, the euro, the yen. I didn't even really look at the Swiss franc, but anyway, that's what we got cooking. And for tomorrow, I won't be here. I'm not going to be on the show Wednesday or Thursday. I may be a call-in guest for Thursday's show if my mind is clear enough. John O'Donnell will be hosting tomorrow. He's got Gene Longobardi, who's the CEO, Chief Operating Officer for Online Trading Academy. Should be a pretty exciting thing. There's so much stuff in the pipelines. I see a lot of questions from you guys about when Click will be live, when we're doing live trading and execution, what are the different programs out there, and what's being done to help students succeed in these financial markets. So those will be some of the topics John O'Donnell will be talking about on tomorrow's show with Gene Longobardi. If you guys have any questions, feel free to send those on in. If you'd like to learn more about trading in stocks, options, futures, Forex, commodities, you name it. There are free classes, paid classes, and much, much more by clicking those links showing up in your social media channels. For those of you at the podcast right now at the gym, go to powertradingradio.com. There's a free class button. Click it, type in your zip code, you get all that same information. Until then, happy trading, everybody. We will see you tomorrow. Take care.
You're listening to Power Trading Radio live. Watch the show live or on the archive at powertradingradio.com and YouTube. Or download the podcast from iTunes or wherever fine podcasts are downloaded.